Hello, everyone. Welcome to our webinar for today. And today we have a very special guest. Later, I'll introduce him to you guys. First, just to do a quick check, are you guys able to hear me? If you can hear me, can you type DLC in the chat so I can see that you guys are all here? Okay, I see Melson, Jaina. What about everyone else? Okay, Ian as well. Okay, that's good. Great to hear that you guys can hear me well. So today our topic is very special. It's the very first time that we are working with SocGen, and today we are talking about unlocking the market opportunities. What's happening in the world right now. There's a lot of very interesting things that we can take a look at right now. So today we'll be talking about DLCs, how you can gain leverage and also have more exposures to the Singapore, Hong Kong, and US stock markets as well. So during this webinar, we have some things to share with you guys. If you have questions, you can type it in the chat as well. And later on, maybe we can cater for like 5 to 10 minutes of Q&A if you guys have questions for Marcus as well. So just a very quick disclaimer, okay? So I realized that I haven't introduced myself. My name is Rachel, and we are actually from Longbridge, Singapore. So whatever that we share over here today is gonna be really for information purposes only. So if you need further advice, please seek for your financial advisors or professional advisors or to advise you much better as well. Okay, so now to the exciting part. Today, our speaker is actually Marcus, and he is the Vice President of the Cross-Asset Listed Product Distribution for SocGen in Singapore, and he's also responsible for a lot of the product management that is listed on SocGen's structured products, and he's also been working on the DLCs, which is daily leverage certificates, for the longest time. And, he's a very experienced person as well. So without further ado, I'll maybe let Marcus to come and introduce himself much better than me. And Marcus, can you please take it away?
Thank you very much, Rachel. I think I'm delighted to be invited by Longbridge Singapore today to share about this exciting product range that we have listed on the SGX. All right, so I hope everyone can hear me clearly. Please do put in the chat if you cannot hear, if the audio has any issue. All right, so today we want to introduce this product, Daily Leverage Certificates, to you guys. It's the first time that we are collaborating with Longbridge. So I think it'll be very exciting times for a trading product like the DLCs. Definitely, trading costs is very important, right? You want to have the minimum or the lowest trading cost for active trading, right? Because you want to minimize on your transaction costs. And I think Longbridge Singapore will be ideal for anyone that is looking to trade the DLCs. All right, so let me just quickly share my slides first so that we can, get started. All right, so hang on. Okay, all right. So, well, today we are going to talk about the daily leverage certificates that Societe Generale has listed on the SGX securities market. All right. So this product is not something new. It has been around since 2017. With SocGen, we were the first to launch the daily leverage certificates on the SGX back in 2017. And it's almost 8 years now that we have 8 to 9 years now that this product has been on the SGX. We have constantly expanded the shelf over the years to offer a wide variety of underlying asset offerings to investors on the Singapore, Hong Kong, and the US markets. All right. So my name is Marcus. I'm here to walk you through today on this product. In this, we have good amount of time today to really run through the product. So I will go slow. We will go into the product. What is this? What is it about? How does it work? What are the key product features? As well as, some use case scenarios that you can to better understand the product. And lastly, I'll show you guys a bit of a tour of our website, dlc.socgn.com. That's our website that we have for the DLCs to show you guys where you can find the full list of DLCs, where to find more educational resources and tools that you can use when trading the DLCs. All right. So the DLCs is a fixed leverage product. All right. It is a fixed leverage product. For those of you who are familiar with leverage and inverse ETFs, Well, these DLCs should definitely sound very familiar to you, all right? Because the payoff of the DLCs is exactly the same as your leverage and inverse ETFs. In the US, it's quite popular now, those two times Tesla, two times NVIDIA, leverage and inverse ETFs. Well, these DLCs are exactly the same, just that we can go higher in terms of leverage. All right, we're not in an ETF structure. The DLCs is in a certificate structure, and that allows us to go a bit higher in terms of leverage. We offer 3 times, 5 times, or 7 times leverage on the underlying asset or underlying index or underlying single stock daily performance. All right, so we go up to 7 times over here, way more than those on the leverage and inverse ETFs. Most leverage and inverse ETFs, the leverage is usually 2 times or 3 times, maximum 3 times. But for the DLCs, we go up to 5 times and 7 times leverage as well. And we also have that leverage and inverse exposure via the long DLC or short DLC. So if you are bullish, you will generally buy the long DLC. But if you are bearish on the underlying, you will buy the short DLC. So you can express your both bullish and bearish views on the market. And I think with recent volatility ever since the Iran war started, I think it definitely pays to have a short instrument on hand for you to capture any downside movement, any downside opportunities in the market, so that you're not only long only, but you can also go short, or even maybe potentially hedging strategies that you could use using the short DLC. So definitely it's a very versatile, very tactical instrument that you can use to capture short-term market opportunities in these volatile times as well. All right, so the DLCs are all listed on the SGX securities market. All right, so you can trade the DLCs via any regular stock brokerage account, including Longbridge Singapore. All right, so you trade the DLCs via any regular stock brokerage account, just like how you would trade your DBS shares or your UOB shares. So it trades just like a stock. All right, so this all the DLCs, all 200 DLCs that SocGen has are all listed on the SGX market, and you can trade it via the brokerage account. All right, you don't need to open any account with SocGen. All right, our website is purely for educational purposes only. All right, so you look for the DLC that you want on our website, and then you go to your brokerage trading platform to trade the DLCs. All right, SocGen, we are the issuer of the DLCs. We issue the DLCs, we list it on the exchange, and we are also the designated market maker. All right, so what this means is that SocGen, we are obligated by the exchange to provide continuous liquidity for each and every one of our DLCs throughout the trading day for investors to buy and sell the DLCs with ease. All right, so a common misconception that people might have is that, this DLC, we have over 200 DLCs that are listed on the SGX. And not every one of them is traded every day. All right, for today, the flavor could be Alibaba. DLCs could be the flavor for today. But my Bilibili DLCs, for example, my DLC on Bilibili stock, no one is really trading it today, so there could be a zero traded value. But it doesn't mean that there's no liquidity on the Bilibili DLCs. All right. Because SocGen, we are always providing liquidity for each and every one of our DLCs in the bid and ask prices, bid and ask volumes throughout the trading day for you to buy and sell the DLCs. All right, so even if there's zero traded value, it doesn't mean that there's no liquidity, because SocGen, we are always there to provide that bid and ask prices, bid and ask volumes for you to buy and sell the DLCs. All right, so I mentioned that we have a wide range of underlyings that the DLCs can gain exposure to. So we have DLCs covering the Hong Kong, Singapore, and the US market. We have expanded the shelf over the last 8 to 9 years to now over 200 DLCs listed on the SGX. So we cover these three markets. On the indices range, we do have your typical Hang Seng Index, Hang Seng Tech Index, Hang Seng China Enterprises Index. On the Singapore side, we do have DLCs on the MSCI Singapore Index. And on the US, we do have the three key US indices, NASDAQ, S&P, and Dow Jones. So this indices range, index DLCs, we go up to 7 times long, 7 times short. So you can gain up to 7 times exposure on the index DLCs, all right? All right, and then on the single stock range, we do have your China Tech Giants, China's Terrific 10. We do have wide range of Hong Kong stocks that you can gain exposure to. We have the tech giants, but we also have the old economy stocks like your insurance companies, Ping An. We do have some of the automobile sector, Geely Auto as well, Sunny Optical, that you can gain exposure to. So Our Hong Kong shelf is one of our most popular range. We do have a wide range of Hong Kong stocks that you can choose from. On the Singapore side, we have the main blue chip stocks. So your three Singapore banks, Capcorp, Sembcorp, etc. We do have quite a nice range of STI constituent stocks that you can gain access to. And also these Hong Kong and Singapore single stock range, we offer 5 times long, 5 times short DLCs on them. So you can gain a 5 times long exposure or a 5 times short exposure on these Hong Kong and Singapore stocks. Lastly, on the US stock range, that's our price, our latest innovation to be able to offer US stocks exposure here on the SGX market. All right, it's something revolutionary, something never done before. But we do have now 3 times long, 3 times short DLCs, giving you exposure to the Magnificent Seven US stocks, as well as a few new additions that we've added, such as Broadcom, AMD, Netflix, Palantir, and Micron. All right, so we'll continue to expand the US shelf because I know everyone is looking at the US stocks, but we do have this nice range of 3 times long, 3 times short US stock DLCs now available for investors to trade on the SGX. You can gain that exposure during Asian hours as well. All right, so you can trade it during SGX market hours during Asian time zone to on these US stock DLCs to gain exposure to these sexy names over here, US stocks, even when the US market is closed. All right, this is something exciting. I will touch on that a bit more later. I'm sure most of you will be wondering, how does it work, right? If the US market is closed, how does the US stock DLCs work during Asian hours? I'll get to that in a bit, all right? But first, let's go into the basics of the DLCs. I mentioned that the DLCs is very much like a leverage and inverse ETF, right? So for those of you who are familiar with leverage and inverse ETF, you know that it is a fixed leverage product. All right. So the daily percentage performance of the underlying stock or underlying index multiplied by the leverage factor, whether is it 3 times, 5 times, or 7 times, will equals to the daily percentage performance of the DLC. So that's the simple formula of DLC. This is basically how the DLC works every day. Underlying move by 1%, the DLC 5 times DLC will move by 5%. So in this example over here, you can see that DBS. Let's take DBS for example. DBS is up 2% today versus its previous day close. So it went up. It's trading now at $51 versus its previous day close of $50. So that's a 2% gain on DBS stock. So my 5 times long DBS DLC will be up by 10%. 2% times by 5, 10% gain on the 5 times long DBS DLC. While my 5 times short DBS DLC will be down by 10%. So remember, your gains are magnified, but your losses are also magnified, right? So short DLC will decline in value when the underlying stock goes up, all right? All right, so that's how it works, all right? So if you got direction correct, you bought the 5 times long DLC, you'll be sitting on a nice 10% gain. But if you bought the 5 times short DBS DLC and the underlying went up, you'll be sitting on losses of minus 10%, okay? So of course, conversely, if DBS share price was down by 2% today versus its previous day close, then my 5 times short DBS DLC will be up by 10%, while my 5 times long DBS DLC would be down by 10%. All right, so that is how the DLCs work. On a close-to-close basis, you will always have this 5 times performance of the underlying stock or underlying index daily percentage performance. This is how the DLCs work every day. On a close-to-close basis, you will get that 5 times performance. All right, so that's the basic formula of the DLC. I think from this slide, it's quite clear, all right, to everyone by now, hopefully, that the DLCs is not an option. It is not a warrant, all right? It is not a margin product, all right? So the DLCs is very different from other leverage products out there in the market, such as options, structured warrants, or even broker financing, margin financing. So the DLCs has no in the money, out of the money, at the money kind of concept. All right, there's no strike price, there is no time decay, there's no impact volatility because it's not an option type product. All right, like options or warrants. Therefore, it is a bit more transparent, a bit more simpler in terms of its payoff over here. The formula is as simple as it gets. All right, so that is how the leverage is on the DLCs. And compared to a margin product, the DLCs have no margining, all right? So there's no risk of margin calls. The leverage is embedded in the pricing formula of the DLC, this 3 times, 5 times, or 7 times, okay? So in essence, it's very much more similar to a leverage and inverse ETF in terms of comparable leverage products out there. and it's nothing like an option, a warrant, or any margin type products. Okay. Right, let's move on. All right. Just to show you guys, an example of how the DLC looks like, right? You must be wondering, DLC sounds nice, 3 times, 5 times, 7 times. So how does it look like? Right, so this is an example of our Alibaba DLC. This is a screenshot of our website over here. So you can, of course, go to our website and see the full list of DLC. This is our Alibaba Long DLC, ZVNW. All right, so ZVNW is the 5 times long Alibaba DLC. You can see over here that Alibaba was up by around 3+% on this day last year in October. And so the DLC returned around 15 to 16%. So that's where the 5 times performance is for the DLC. Right, it's a 5 times long DLC. So you get that 5 times performance of the underlying stocks daily percentage performance. All right, so that's where the 5 times performance is. And you can see that the DLC is of a different price, right, compared to the Alibaba stock. The Alibaba stock in Hong Kong is around 160 Hong Kong dollars at this point of time in this screenshot. But the DLC is all priced in Singapore dollar currency. All right, so you don't have to go through the hassle of changing your money to Hong Kong dollars just to gain exposure to Hong Kong stocks. You trade all the DLCs in Singapore dollar currency only. So that gives you a bit of that convenience. All right. So the price is different. All right. This DLC price is around $2 plus. All right. But the performance is where the 5 times is. All right. So if the underlying stock moves 3%, this DLC will move by 15 to 16%. So the price is different. All right. So I need a bit of understanding there. So this DLC, if you close at 277 on this particular day today, and tomorrow Alibaba gains another 3%, well, the DLC will be up by 15% from this price of 277. All right, so that's where the 5 times performance is, and the DLC price is different from the underlying stock itself. And for the name of the DLC, you can see at the top over there, all the DLCs have a 4-character stock code. So this Alibaba Long DLC 4-character stock code is ZVNW. All right, so if you go into your broker trading platform and you search for ZVNW, you will be able to see this 5 times long Alibaba DLC. And in the name of the product, you can see that it always starts with the underlying stock or underlying index that it tracks. This one tracks the Alibaba stock listed on Hong Kong Exchange with a 5 times leverage. All right, 5 times leverage, and it's a long DLC. Remember, if you are bullish, you buy the long DLC, but if you're bearish on the underlying, you'll buy the short DLC. All right, and then followed by SG. SG stands for Societe Generale. We are the issuer of this DLC, and then followed by the expiry date in year, month, date format. So this DLC will expire on 12th July 2027. Most of our DLCs are all long dated expiry, 2 years or 3 years expiry. At this point, I mean, the expiry date, I want to make it clear that even though the DLCs have an expiry date, usually 2 years or 3 years of tenure, all right, but the expiry date does not affect the performance of the DLC in any way, all right? So the DLC, there is no time decay. So in a similar to or like in the options world, the closer you are to expiry, the time decay will accelerate. But for this DLC, there's no such thing as time decay. We do have an expiry date, unfortunately, even though these kind of products, technically, the DLC does not need to have an expiry date. But due to regulatory reasons, we do have to have an expiry date for each and every one of our DLC, and it's usually 2 to 3 years. All right, but it does not affect the performance of the DLC. Every day from the day that is listed all the way up to your expiry date, you will get that same 5 times performance every day on a close-to-close basis of the underlying stocks, daily percentage performance, and whatever is the value of the DLC one day before the expiry date, it is, we'll take that value and then we'll cash settle back that value to holders via the SGX. The same way that you receive your DBS dividends or your UOB dividends, you'll receive the cash settlement payout from the SGX in the same way. All right. So again, expiry date is there. It's usually long dated, but it does not affect the performance of the DLC in any way at all. Okay. And then, of course, just to show the other side of the coin, your gains are magnified. Alibaba was up 3%, the DLC was up 15 to 16%, but the short DLC suffered. So it is also down minus 15 to 16% on this 5 times short Alibaba DLC, RHDW. You can see the 2 lines over there. This is an interactive chart that we have on our website. It's an inverse relationship, all right? So if the underlying goes up, the Alibaba short DLC RHDW will fall in value as well. Okay, so this is an inverse relationship because it's a short DLC. All right. So the DLCs So far, you've seen it's a leverage instrument, fixed leverage instrument, giving you that 3 times, 5 times, 7 times performance. You know, you can see that it can give you quite magnified gains, but also magnified losses. So the DLCs is generally a short-term trading instrument. Typically, we generally recommend to investors that you either trade it day trading, intraday trading, or you hold it for a few days or a few weeks. But the DLC is definitely not a buy and hold investment type of product. All right, so please take note of this. The DLC is a tactical short-term trading instrument that you can use to capture short-term market opportunities, and it's not for you to buy and hold for a year or 2 years. It's not a buy and hold kind of investment. So please, you have to be actively monitoring the market, actively monitoring the instrument as well, when trading the DLCs. So popular trading strategies when trading in DLCs would include day trading, will include swing trading, for a few days or a few weeks, or, for those who are a bit more sophisticated, you can use the short DLCs for hedging purposes as well. So on day trading, which is a very popular trading strategy on the DLCs, for example, this 5 times long PopMart DLC, all right, back in October last year, you could see that PopMart, on an intraday basis, gained 4.5% from at around 1 p.m. in the afternoon. So the whole morning session, the PopMart gained 4.5% on an intraday basis, and the 5 times long PopMart DLC IAUW gained 22%. All right, so that kind of double-digit returns, on an intraday basis, 9 a.m., 9:30 a.m. to 1 p.m., 1:30 p.m. trade, maybe a 4-hour trade, and you can get 22% gain. There's no wonder why, the DLCs can be very popular for day trading, for intraday trading. You buy it in at 8:30 a.m. in the morning, and you sell back at 1:30 p.m. in the afternoon for a 22% gain. That is a quick trade. All right. So day trading is very popular on the DLCs, especially the Hong Kong underlyings, where it's perhaps a bit more volatile. Okay, I won't say a bit more, a lot more volatile, all right, than the Singapore stocks per se. For Hong Kong stocks, a 4% day is very common for most of the stocks. All right. So for these DLCs, especially on the Hong Kong underlying, Hong Kong index and Hong Kong stock DLCs, day trading is very, very popular. Okay. How about for those who are not so, you have a full-time job, and you don't have the time and luxury to monitor the market so closely on an active trading basis, like an intraday basis? Well, some of them do use the DLCs for swing trades. All right, so that means you hold it for a few days or a few weeks to ride a nice trend, either uptrend or a downtrend, but that could last for over a few days or a few weeks. All right, so swing trading is very popular on the DLCs as well. So in this example over here, you can see the 5 times short Tencent DLC, W7XW. All right, Tencent was down around 7% during this 5-day trading period in October last year. It was down around 7%. So W7XW gained around 39% gain. Right, it gained around 39% during this 5-day trading period on the back of Tencent share price falling. All right, for those of you who are sharp, you see, oh, Tencent dropped 7%. But my W7XW, my 5 times short Tencent DLC, gained 39%. Minus 7% times by 5 is only 35%, right? How come this W7XW gained 39%? 4% more than the, supposedly 5 times of the underlying stock movement. All right. So this is where the compounding effect feature, which is a very important feature of the DLC, kicks in. All right. The compounding effect can work very well for you in a nice trending market like this. All right, so Tencent share price keeps falling over the 5-day trading period. So the 5 times short DBS, Tencent DLC kept having that compounded gains over the 5 trading days to give you more than the 5 times performance on this DLC. All right, so it was up 39% versus the underlying stock down 7%, down by 5, 35%. So it'll give you the extra 4% kicker because of the compounded gains on this short DLC. All right, so that's another reason why swing trading is very popular on the DLCs as well, because the compounding effect can work very well for you in a nice trending market. All right, if you manage to capture 5 consecutive days of gains, of uptrend on the underlying stock, and you bought the long DLC, you would have been sitting on more than the 5 times performance. You'll be sitting on some nice gains because of the compounding effect. Okay, so we'll get into compounding effect later on in a bit. All right, but swing trading, yes, it's very popular on the DLCs as well. A few days or a few weeks, but please, again, I would like to emphasize, please do not hold on to the DLCs for months or even a year. This is still a short-term trading instrument, even though you can hold it for a few days or a few weeks. Lastly, For those of you who are more sophisticated, or those of you who are actually more passive, are more into investment, etc. But it doesn't mean that you cannot do a short-term tactical hedge. All right, if you see that DBS share price is falling, okay, like it has been in the last couple of weeks, you could use the short DBS DLC to actually make some gains to offset your paper losses on your long-term buy and hold investment portfolio on DBS. All right, so you can hold your DBS shares, continue to get a yield play, you write out all the market volatility, but within that market volatility, a short-term downtrend on DBS or any downtrend in DBS stock price, you could use the short DLC to make some gains. As this example over here, DBS was down 2% in this 5-day trading period in October last year. So my 5 times short DBS DLC SZWW gained around 11% on the back of DBS share price falling. All right. So hedging, is something that you could use you could adopt by using the short DLCs that we have available on the various underlyings that we have. All right. But shorting, I guess, is something that's not very familiar with the average investor. All right. So again, I exercise caution that this is a short-term tactical hedge example. All right. So you need to be able to position size accordingly based on your what you're trying to hedge. And also, you need to monitor your position size and trade discipline, especially when shorting the market, especially because shorting and hedging is not for everyone. All right. So please exercise caution. You should know what you're doing before you start to hedge your investment portfolio. You have to position size and make sure that your exposure is hedged properly as well. All right. But again, when you're coming to a short DLC, I just want to highlight here that if you're ever looking to short anything, right, go short on Alibaba stock, go short on DBS stock, go short on an index, etc. It's always important to use an instrument that caps your losses or mitigates or minimizes your risk, right? If you naked short on the underlying stock, the stock can go to infinity, and your losses are unlimited in that sense, and you can get margin calls after margin calls per se. All right. But if you use a short instrument like the DLC, your losses are capped at your investment amount. If I put in $1,000 to buy this short DBS DLC, $1,000, I buy $1,000 worth of this DBS short DLC, and let's say DBS flies to the moon, right? It goes up by 30-40%. Times by 5, that's 120-150% loss. All right. But by 5 times short DBS DLC, maximum loss is only at 100%. All right. You cannot lose more than your invested amount. So if I put in $1,000, the maximum I can lose is $1,000. All right. So you at least know that your maximum loss is there as compared to a margin product where losses could be unlimited. All right. So when you're coming to short something, it's always good to have an instrument like the DLCs that can cap your losses as well. Okay. All right. Let's get into a bit more of the exciting stuff now. All right. We want to introduce the US stock DLC. All right. This little red robot, if you've seen it around, it represents our US stock DLC shelf, but also generally our DLCs now. So this is an example of the DLCs that we have. This is a Magnificent Seven stocks, but we have since expanded into more underlines like Micron, Palantir, etc. But 3 times long, 3 times short, on the US stock, we only have up to 3 times for now. All right, we have not expanded to 5 times yet, but in time to come, hopefully we will. Right now, we only have 3 times long, 3 times short DLCs on our US stocks. All right, on our US stocks, Tesla, Nvidia. So if you want to long Tesla 3 times long, you will look for TSYW. That's the stock code for the 3 times long Tesla DLC. If you want to go short on Tesla, you will look for RLSW. That's the 3 times short Tesla DLC, the stock code for that. All right. So the US stock DLCs is interesting because it offers you Asian hour exposure to the underlying to the US stock. All right. So for those of you who might be wondering, how does the US stock work, right? US stock DLCs work given that the US market is closed. For those of you who are perhaps more familiar or in tune with the fintech brokers in Singapore like Longbridge, etc., or even the other fintech brokers, there has been a rise of overnight trading. All right. So overnight trading session meaning that the US stocks actually trade during Asian hours. All right. It actually trades during Asian hours on these alternative trading systems. So there's actual price discovery of the US stocks during Asian hours, and the DLCs, the US stock DLCs that we have, will track this Asian hour price during Asian hours. All right. And then it will track the US market price overnight during the US market hours. So In other words, the DLC kind of gives you that 24-hour exposure, all right, to the underlying US stocks movement. But the US stock DLCs can only be traded during SGX market hours. All right. So this example over here, just to highlight how it works on a 24-hour cycle basis. Say this morning the US market closed, the US stock closed at $100. All right. The far most left of my diagram, the US stock closed at $100 this morning, 4 a.m. Singapore time. My 3 times long DLC closed at $1. All right, it closed at $1 this morning at 4 a.m. Singapore time. And let's say after the US market closed, the US stock announced its results. All right, it announced better than expected results. And so by the time post market and by the time 9 a.m. Singapore time during Asian hours, this Asian hour price of the US stock, the US stock is already up 6%. All right, it's already up 6% to $106. All right, so my 3 times long DLC will give you that 3 times performance. So you'll be trading at $1.18 plus 18% from its close earlier that morning at $1. All right. So at 9 a.m. Singapore time, when SocGen will start quoting on our US stock DLCs at 9 a.m. Singapore time, we'll be quoting the 3 times long DLC at around $1.18 already because the US stock is up 6% due to its favorable announced earnings results. And let's say you think that the US stock, will continue on its bullish run. All right, it will continue on its bullish run. When more institutional players come in, during the US market hours, it will go even higher than $106. So if you believe that it's going to have more bullish momentum as time plays out, you can buy the 3 times long DLC first thing at 9 a.m. Singapore time at $1.18. All right, you can buy it at $1.18. And if indeed your view is correct and the US stock continue to rise further during Asian hours, just before SGX market close 5 p.m., the US stock in the Asian hour price discovery is already up $110, so up 10%. All right, so the 3 times long DLC will be up by 30%, to be trading at around $1.30. So if you bought it at this morning at $1.18, come 5 p.m. just before market close on the SGX market, you can sell it back to SocGen at $1.30 to lock in your profit of 12 cents. All right, so for a quick one-day trade, you can gain that 12 cents profit, all right, plus and close off a position before the SGX market close. But if you want to ride it out a bit longer, you can choose to hold the DLC overnight after the SGX market close. You can choose to hold the DLC overnight, so you don't sell back to SocGen yet, you just hold on to it, all right, but please note that you cannot manage your position during the US market hours overnight. All right, even though you cannot manage your position during the US market overnight, the stock DLC, the 3 times long DLC will still maintain its exposure to the US stock movement. So if the US stock continue to rise further during the US market hours to plus 15% to $115 over here, my 3 times long DLC, the value will also rise by 45% in total to $1.45. All right. So the value of the DLC at, say, US market session just before the US market close is at $1.45. All right. But you cannot buy and sell the DLC yet. All right. Because the US market, the SGX market is closed during the US market hours. All right. So at 4 a.m. Singapore time, the DLC value is $1.45, but you cannot sell it back yet. All right. You got to wait till the next morning when SGX market opens the next day at 9 a.m. Singapore time. If the US stock is still trading at $115, the 3 times long DLC will be quoting at $1.45, and you can sell back to SocGen at 9 a.m. Singapore time at $1.45 to lock in a profit of $1.45 versus your purchase price of $1.18. Okay, so that's how it works on a 24-hour basis. Key point to note, on a close-to-close basis, on a US close-to-close basis, you will have that 3 times performance of the underlying US stocks daily percentage performance, and you can only trade the DLCs, the US stock DLCs, during SGX market hours 9 a.m. to 5 p.m. You cannot manage your positions during the US market hours, even though the DLC will continue to maintain its exposure to the US stock movement during the US market regular hours. Okay, so this US stock DLCs, I know it's not that intuitive. I mean, because Asian hour, US market is closed, how does it work, etc. But it really does present you with a new trading window during Asian hours. All right, during Asian hours, 9 a.m. to 5 p.m., you can get in early ahead of the US market open using our US stock DLCs. All right. So the US stock DLCs, we do have the 3 times long, 3 times short on the US stocks. For the indices, Nasdaq, S&P, Dow Jones, we do have that up to 7 times performance, 7 times DLCs on those. So 7 times long, 7 times short, Nasdaq has been one of our popular DLCs as well. And during Asian hours, all right, during SGX market hours, please note that it will track the E-mini futures that is traded, around the clock. Okay, so that's about a bit about the trading up strategies of the DLC, a bit of an introduction on our US stock DLCs. Before I go into the more practical in terms of our website, to give you guys a tour of our website, I want to touch on the compounding effect feature because it's very important for such leverage and inverse products. Similar to your NI ETFs, there is this compounding effect feature that can work very well for you in a nice trending market, but can work against you in a volatile or sideways market. So let's look at how it works very well for you in a trading market. I mean, earlier you saw the example, right, on the 10-cent short DLC, where you managed to get 39% gain, even though the underlying stock only fell by -7%, right? So similar over here, the table on the left, you can see that the underlying was up by 1% on day one, up by another 2% on day two, and then up by another 2% on day three. So 3 consecutive days of gains. Every day, my 5 times DLC will give you that 5 times performance. First day is up 5%. Second day is up 10%, day three is up by another 10%. So that's where the 5 times performance is. But look at it cumulatively over the 3 trading days, the underlying is up by 5% over the 3 trading days. But my DLC gave me 27% gain. So 5% times by 5 is only 25%, but my DLC gave me 27% gain. The extra 2% kicker is because of the compounding effect or compounded gains. Every day your gains and losses are locked in. So the 10% gain on day 2 is based off a higher base. The 10% gain on day 3 is based off a higher base. Therefore, you get that compounded gains. All right. So that's why the DLCs, in a nice trending market, and you got the direction correct, it can work very well for you, this compounding effect, where it can give you more than the 5 times performance or more than the leverage performance because of the compounded gains or compounding effect of the DLC. Okay, so nice trading market works fabulous for the DRC, but in a volatile or sideways market like the table on the right over here, you see that the underlying is up by 2% on day one, down by 4% on day two, and then rebounds back by 7.3% on day three. Cumulatively, the underlying is up by 5%, but my 5 times DLC only gained 20%, less than the 5 times performance because of the compounding effect. On day one, I get 10% gain because underlying up by 2%. Day two, I suffered a loss of 20% because underlying was down by 4%. And then day three, I gained 37% because underlying rebounded by 7.3%. But because of the losses on day two, which is locked in already, the 37% gain on day three is based off a lower base of $2.20. Therefore, it gives you a bit of a lower leverage factor cumulatively over the 3 trading days. All right. So in a volatile or sideways market like this, the compounding effect will not work so well for you. All right. Especially, that's another reason why we say that the DLCs are not long-term buy and hold instruments. All right. It's not a buy and hold instrument because in the long run, markets are generally sideways, all right? And the sideways market does not work very well for the DLCs, all right? So please, again, these DLCs are short-term trading instrument where you have a bit more conviction, a bit more visibility on the trend, and that's where, the DLCs will unleash its full potential in a nice trending market, okay? All right, I think that's about it. Versus other leverage products, I've shared with you a bit about how it's not an option, not a warrant, etc. It's very much more similar to an LNI ETF, all right? And compared to margin products, it is not a margin product, all right? Therefore, there is no risk of margin call, and the maximum loss is capped at the invested amount for the DLCs only, all right? So your maximum loss is 100%. You cannot lose more than your invested amount on the DLCs, all right? So I think at this point here, let's go fast forward to our website. So we do have a website, dlc.socgen.com. So let me give you a tour of our website so that you can see, what do we have on our website that could, really value add to your DLC trading experience. So let me just quickly unshare this, and I will share my browser instead. Okay. Okay, so let's look at my browser. So this is our website, dlc.socgen.com. All right, dlc.socgen.com. This is our website. So this is a purely educational website that SocGen has for our range of products on the DLC. So, I mean, yes, you see, we've just launched a few new underlyings. We are constantly trying to innovate, trying to introduce more underlyings that you can choose from. So we have done introduced Ctrim, Trip.com, listed on Hong Kong Exchange, as well as Palantir and Micron as well. You can find our newly launched products over here under the newly launched DLCs tab. You can see the full range of DLCs that we have listed, in the past 3 months. Okay, So our full list of DLCs can be found under the products tab over here. All right. So you can find the 223 DLCs that we have listed on the SGX, offering you a wide range of exposure to many indices, US stocks, Hong Kong, Singapore stocks as well. So a wide range of underlying indices and underlying stocks that you can choose from over here. Let's say you want to choose Alibaba. So you look for Alibaba over here, and then we have this DLCs listed over here, 8 DLCs on them. Let's say you are bullish on Alibaba. You want to choose the long DLC over here. So it will filter out all the long DLCs for you. Remember, if you're bullish, you buy the long DLC. If you're bearish, you buy the short DLC. Remember that, all right? So if you're long, you want to go long on Alibaba, you think that there could be a upside potential on Alibaba stock, you could potentially look at the 5 times long Alibaba DLC. And also, there are 3 Alibaba long DLCs over here. All right. So what's the difference? First of all, RUMW over here is the 3 times one. All right. So we do have a few leverage factors that you can choose from. If you're a bit more risk averse, you can choose the 3 times one. If you want a bit more kicker, you can go for the 5 times one over here. So let's say we want to go for the 5 times one over here. All right. So we have 2 Alibaba long DLCs over here. One is ZVNW. One is KMMW. All right. So which one should you choose, right? Which one should you choose? Generally, we always recommend that you choose the higher price DLC, those that are higher price, because it's more sensitive in nature. Both Alibaba long DLC will give you that same 5 times performance of the underlying stock's daily percentage performance, but the difference on them is the price. One is at 22 cents, one is at 3 cents over here. All right. So the higher the price of the DLC, generally, the more sensitive it is. Right. You can see over here for KMMW, it has a high, it has a the sensitivity is over here. So it's a more insensitive product. Okay, this 3 cents one is a very insensitive product, which requires a 71 cents move on Alibaba stock to move before it can move by 1 tick over here. 1 tick over here is 0.001. All right, okay. So it will require a 70 cents move on Alibaba stock here before you can move by 1 minimum bid size, which is 0.001 over here. Whereas for ZVNW, the Alibaba Z long DLC over here, it requires a 50 cents move on Alibaba stock before it can move by 1 minimum bid over here, which is 0.005. Right? So we always want to have a bit more of the more sensitive DLC, because for a given range on the underlying stock move, right, this DLC can move more number of ticks, and therefore widen your trading options or trading flexibility over there. You don't have to wait so long for the Alibaba stock to move before it even covers your spread. All right. So you want to choose a DLC that is much more sensitive. All right. So the lower the number over here on the sensitivity column, the more sensitive it is to the underlying stock movement. All right. But of course, when in doubt, always look out for the red star indicator. We always put a red star indicator for each of the DLCs for particular underlying and per direction. We always put a red star indicator for the more sensitive one. So these 2 Alibaba long DLC, 5 times long Alibaba DLC, ZVNW is the more sensitive one indicated by the red star indicator over here. And definitely your preferred DLC when trading the Alibaba long, or if you want to take a long exposure to Alibaba, you should be looking at this ZVNW. So once you have this, DLC that you want, you will go take this stock code ZVNW. All right. Then you go into your Long Bridge trading platform, and then that's where you can buy and sell the DLCs over there. For us, we are displaying our code, our B&R's codes over here. Right now it's a lunch break, so maybe you won't see it moving because it's lunchtime now. All right. But these B&R's prices will continue to move with the underlying stock performance. You can see over here, the DLC has fallen today because Alibaba stock is on the decline today over here. All right. So you can see this chart over here. This is our bid and ask prices over here. Societe Generale, what we are quoting in the market just before the lunch close, is also what you can see on your Longbridge trading platform. You can see the bid and ask prices there. That is us quoting in the market. So you can take reference from our website over here. If you see that, I see Societe Generale quoting at 22, 22.5 over here on the bid and ask, you should see the same on your Longbridge trading platform before you start trading the DLC as well. Okay. So remember, this DLC over here, always look out for the red star indicator. All right. Always look out for the red star indicator because that's the more sensitive DLC over here, ZVNW. Similarly, for other DLCs, there's always also a red star indicator for you to identify which one is the more sensitive DLC. Okay, so we do have a wide range of DLCs for you to choose from over here. Please use our search page under products over here to look for the DLC that you want before going into your brokerage trading platform to trade the DLC. And if you want to find out a bit more about the DLCs, more about the compounding effect feature, go to our education tab over here. You can find all the different information about the DLCs over here with more in-depth illustrations, especially on the compounding effect over here. How does it work in a rising market? How does it work in a falling market? How does it work in a volatile market? Important to understand. All right, so more information over here. We also have some videos for you to watch if you want to learn more about the sensitivity, how to select the right DLC for target exposure. You can always look at for this short videos that I've recorded for everyone to learn more about the DLCs as well. So it's usually 3 or 4 minutes video, but good enough for you to understand a bit about the DLC, more about the DLCs on specific topics over here. All right, how does the US stock DLC work? What are the benefits? You can have a look over here as well. Okay. All right, so that is on the products tab, full list of DLCs, education tab, more resources for you to go through, FAQs, videos, handbook. And we have a dedicated tab on the US stock, US indices shelf. All right, so you can refer to our US market tab over here to learn more about the US indices and US stock DLCs, as well as some FAQ at the bottom to learn more about the US underlying DLCs over here as well. All right, and last but not least, we do have, okay, last two things. Last but not, we have a newsletter. So do sign up for our newsletter over here under the news, under the newsletter. All right. So you can look out for our newsletter. We send it out twice a week. You can subscribe to our newsletter over here, and then you can to keep up to date on what are the DLCs that are moving. You know, which are the underlyings that are moving, as well as any new DLCs that we have listed. Please subscribe for our newsletter over here. And lastly, last but not least, we do have a hotline. All right, so we do have a hotline, DRC hotline 6226-2828. Give us a call anytime during SGS market hours. My team and I will on standby to answer any questions or address any feedback that you have on the DLCs. So please do not hesitate to call us at this number 6226-2828 if you want to understand more about the DLCs or if you have any feedback, just give us a call. All right, I think I've come to the end of my presentation. I think we will now proceed to a bit of Q&A. I hope that has given you a good overview of what the DLCs can offer for you to gain exposure to Singapore underlyings, Hong Kong underlyings, as well as the US underlyings as well. All right. All right. I think,
Right.
Rachel, back to you.
Yeah, thank you, Marcus, for your very insightful sharing. I think we all got a very, very good idea, or at least a great introduction on DLCs as well. I think there are some questions that some of our participants are actually asking. So, Jerry has a question. How is the fees being charged for every trade, Marcus?
Okay. All right. So if you trade the DLCs on an intraday basis, all right. So you buy and sell within the same day, all right. Generally, SocGen we do not charge any fee. All right, we do not charge you any fee. You just pay your regular stock brokerage fee. So I believe Longbridge has one of the lowest commissions in town. All right.
Yes,
So
we do.
you'll be charged your broker's fees as well as the SGX trading fees. But other than that, SocGen we do not charge anything if you buy and sell the DLCs within the same day. All right.
Yes,
But if you
yes.
hold your positions overnight, if you hold your positions overnight, all right, that's where we'll charge an overnight funding cost because we need to fund the leverage, right? You're getting a leverage exposure. We need to fund that leverage, and we charge that overnight funding cost to the price of the product. All right. So if the product price is DLC price is $1, for example, all right, and the underlying stock the next day didn't move at all. Next, you hold it the DLC, you bought it $1, you hold it overnight. Next morning, the underlying stock is, for example, we assume that it's unchanged, the underlying stock is flat. Technically, the DLC value is actually not $1 anymore. It is 0.999995, for example, because we charge the overnight funding cost to the price of the DLC every night. All right. And
Right.
this 0.00005 charge, or whatever that we charge for the overnight funding cost, is published on our website for each and every one of our DLC under the fee section, where we will show you the overnight funding cost in absolute amount, how much is charged every night. Right. So I think generally, compared to other leverage products out there, SocGen, the overnight funding is about the same. All right, which can be quite negligible if you hold it for a few days, overnight, one night, or a few days, 1 or 2 weeks. But definitely it will add up. It will add up. So that's another reason why the DLCs are not long-term buy and hold instrument. All right. So you shouldn't be holding on to the DLCs for months or even a year because the overnight funding costs can add up and it can be quite a sizable sum as well if you hold it for, months or even a year. Okay?
Exactly, exactly. So just remember that it is really short for short term, either swing trading or day trading, and then you won't be charged the fees lah. We have one questions in the Q&A segment as well from another person. Why are the expiry dates different for different DLCs? Are there any expiry dates for DLCs, Marcus?
Yeah, so I think the expiry date is something that unfortunately, it's something that I am not happy about. I mean, for those of you who have seen leverage and inverse ETFs in the world, etc., there's no expiry date to it. All right. So the
Yep.
DLCs are kind of like L&I ETF, where the payoff is the same. But unfortunately, we do have to have an expiry date for each and every one of our DLCs.
Right.
Usually, there are a 2-year tenure or a 3-year tenure, maximum 3 years. It's a tenure. All right. So if I want to list a DLC today, I would, have it expire 2 years later. But if I list another DLC in let's say in May, all right, then it will also be expire 2 years from May. Therefore, the DLCs will all have different expiry dates depending on when they're listed. But even though they both have the same 2-year tenure, all right,
Mm.
but depending on when it's listed, the expiry date would be different. All right, but again, I emphasize that the expiry date is something that we must have for the DLCs, but it doesn't affect the performance of the DLC at all. There's no
Right.
such thing as time decay, no such thing as, expiring in the money or out of the money kind of concept. All right.
Yep.
So the expiry date does not affect the performance of the DLC. From the dates listed all the way up to your expiry date, every day you get the same 5 times performance of the underlying stock or underlying index. And whatever is the value of the DLC 1 day before the expiry date, we will just cash settle back the value back to holders via the SGX.
I see, I see. That's good, that's good. Now, Marcus, actually, just a personal question, right?
Yeah.
Because I do invest as well, and I do use like leverage products as well. So, is there a reason why, the leverage is actually capped at 7x? Is there a particular reason that we cannot go beyond 7, we cannot go 10, we cannot go like
Oh,
20?
we can. I mean,
Oh,
we,
we
we do
can.
have a wide range of such products
Yeah.
on Europe, in our Europe market, in our European markets. So we have almost like 100,000, 200,000 products listed
Oh,
on the
wow.
European exchanges. Similar products like this, where it gives you that, fixed leverage factor. And in Europe,
Mhm.
I think we go up to like 15 times leverage, 10 times
Wow.
leverage. All right.
It's pretty
But
good.
of course, I think too low leverage is not great, but
Yep.
too high leverage is also not great. All right, so
Yeah.
finding the sweet spot. All right, and I think we take our experience from Europe, where where is the sweet spot? Where is the sweet spot? All right, for me generally, I think for single stocks, the sweet spot is 5 times. All right.
Mhm. Right.
Therefore, on our single stock DLCs, we generally do not go above 5 times leverage, even though technically, we can work with the regulators to go higher. All right. There's nothing capping us like the L&I ETFs. All right. But for now, we think that 5 times is a very healthy leverage level for single stocks. For the indices, technically we can go higher. All right. I think the sweet spot is 7 to 10. All right. But we're starting with 7 times leverage first for
Right.
the index. Possibly maybe in the future there could be a 10 times for the index
Right.
underlying DLCs. But definitely more than 10 times, I don't think it's very healthy leverage to a certain extent. All right.
Nice.
So it's about finding the sweet spot.
Right. Okay. That's good to know. Yeah. Just really curious about like why is it like 7 times is the cap? But yeah, thanks for your
Ah,
answer.
yeah.
We have one more question by
Sure.
LK. LK is asking, are DLCs similar to warrants in the Hong Kong markets?
Completely different. All right. So the DLCs are completely different from warrants. All right. So it is not an option type product. So the warrants, I guess you have to know, what the strike price you're buying at, and then whether it expires in the money or out of the money,
Yep.
it depends on your payoff will be different. And also you got to take note of implied volatility and time decay that could affect the price of the warrant. All right. And implied volatility, more often than not, is something that is not transparent to investors because it's implied, right? It's implied. You won't be able to know what is the implied volatility to an extent, what the issuer is pricing. So therefore, I think warrants is options. It's more of option type payoff. The
Yep.
DLCs is completely different because there is no optionality in the product itself. All right. The
Oh,
leverage is that 3 times, 5 times, 7 times. that leverage strategy formula is embedded in the price of the product. All right. It has nothing to do with options. All right. So there's no strike price, there's no impact volatility, nothing like that on the DLC. So completely different. I
Yeah.
think our experience, having done a wide range of structured products listed on the Hong Kong Exchange and in Europe is generally, I think investors are becoming a bit more you want something more transparent, right? You want something more transparent, much more easier to understand. Options and warrants tend to be quite complex, quite complicated to understand. How does the option payoff work, all right? And never really fully transparent in a certain extent. So we wanted to introduce a product on the SGX 8 years ago that is not an option type product, but still
Mhm.
give investors that leverage because maybe Asians love leverage, right?
Yeah.
But leverage that is transparent to a certain extent, and therefore we came across this sort of like fixed leverage instrument, this daily leverage certificates that has the kind of same payoff as a LNI ETF. People are loving LNI ETF as well because of that, linear payoff that 3 times is easy to understand. I can see the underlying go up 1%, the ETF go up by 3%. People love that payoff, all right? But perhaps, we think that, 3 times could be a little too low leverage for a meaningful like active trade, short-term trade. So we found the DLCs that can give you that same kind of payoff, 3 times, 5 times, 7 times, but be able to go higher in terms of leverage because we're not an ETF structure but a certificate structure. All right. So I think the DLCs is more like an LNI ETF, but definitely it's still a product on its own. It's nothing like an option, nothing like a warrant. So I think please do not mix it up with that. Okay.
Right. Oh, Marcus, just now someone was asking me, how can we actually, take a look at DLCs in our Longbridge app account. So, just trying to show you guys in the demo. You guys can see, right, Marcus, on my
Yes, I
screen?
can see it.
Okay, cool. So, once you log into your Longbridge mobile app, you can actually go and search for the specific DLC product by SocGen that you want to enter. So, for example, just now, I think Marcus did show us about Alibaba 5X, which is one of the most popular ones. Once you actually click onto the code that with the star that Marcus just now mentioned, you can actually, I think all of it should be 4 letters, right?
Yes.
And so you can actually go and search for it, and you can click on buy or sell. If you actually buy over here, for price wise, you can actually bargain, and the quantity is actually minimum 100 units, which is one lot lah. So you can buy 200, you can buy 500. It's also up to you. So you can just key in over here. Then they will show you what's the final amount. Then you can click confirm. So that's how you actually buy the DLCs as well, on our Longbridge app. Okay. Another one, also one of the more popular one, the HS Tech DLCs, you can also do the same as well. So I would highly encourage you guys to go and explore it in the Longbridge app, maybe just to look at, how the performance has been, and then also probably add it to your watch list as well. If you are interested to trade DLCs, you can always go on to the website that we have posted in the chat, or you can just Google for SocGen's website to search for it lah. So, Marcus, before we end off, do you have anything you want to share with everyone about DLCs?
Well, I think I guess when people learn about the DLCs,
Mm,
the skeptical hit mind they might have is that, oh, I'm a buy and hold investor only.
yeah,
I want to, just get the yield. I know I'm a bit more, risk adverse.
yeah,
Well, I mean, definitely, not this instrument might not be for everyone, right? The DLCs might not be for everyone out there. But I strongly believe, again, I strongly believe that even buy and hold investors, even a long-term investment strategy can still have that short-term tactical strategy in place. Like how you have a stock portfolio, but you might have satellite portfolios everywhere, right?
mm,
So it's more like take an open approach on the DLCs. You never know when you might need an instrument like that for a short-term tactical trade, right? So for those of you, who are not an active day trader, sophisticated trader, it doesn't mean that the DLCs could not become useful for you. All right. So it always pays to just maybe upskill, learn more about what products are there out there in the market, You might not be trading a DLCs every day because you don't have the time. But when the market presents the opportunity, perhaps this 5 times long, 5 times short DLC could come to you, come in mind, and it could come in very useful for you to capture a short-term trade in the market or a short-term opportunity in the market. So I hope that everyone can just take the time to learn more about this product, as part of your learning journey as an investor. And then, get yourself ready because when the market comes and the market opportunity comes, it's too late for you to scramble and say,
Yeah.
oh, what can I use? What can I not use? So have it handy in mind, learn more about it. And of course, reach out to us, Song Jan. We're happy to guide you and to show you, where the gaps are in your knowledge, and to be able to really get you familiar with the DLCs as well, to strike when the iron is out, when the market is there, you want to immediately deploy using the DLCs. All right, thanks.
Definitely. And I think now it's really a good period of time to strike while the iron is hot, right? And yeah, now I just really want to thank Marcus for sharing with us really everything that you guys have. And thanks everyone in the audience as well for asking your questions. We will also have another session in about 1 month's time. We will also let you guys know for our second session what we'll be sharing. So I hope you guys enjoyed our lunchtime session today. We hope that you guys learn a lot from Marcus and also go and check out what's going on for DLCs on the SocGen website. And we'll see you guys next time. Bye
Thank you,
bye.
Rachel, for having me. Thank you, everyone.
Thanks, Marcus. Bye, everyone.